And good morning, welcome. It's great to have you all here this morning, coming from some closer, some further places to visit us. That's really good. And today, in terms of chaos and logistics, sometimes it's not to be assumed as pretty normal that people from Frankfurt arrive in Cologne on time, but it seems like it pretty much worked. So as I said, great to have you here, because we're really excited about telling you not only about current performance, don't worry, we'll get to that as well, but in particular how we want to develop the company over the next 5, 6, 7 years, because it's about a long-term transformation, a long-term strategic agenda, which we're going to update you on. But I'm also very happy, Mark indicated it already, that we've got quite a comprehensive leadership team here physically presenting the company, but also themselves to you, because often when we talk to investors and analysts, it's mainly the CEO and the CFO. But I think it's important that you get a feeling that behind DEUTZ there's more than those two faces to the capital market. Let me call it management depth. And want to be very quickly, and obviously ladies first, Petra Meyer, our Chief Operating Officer, now in the end of the second year already, right? So you've been around last year on the Capital Market Day as well. She will take quite a part in our presentation, of course, and then going to Markus Müller, in Germany we would say Dienstälteste DEUTZ Mitarbeiter, but you are CTO and CSO in your third year as a board member, I believe, or is it already the fourth year? Fourth year, yeah, time's flying. And then Oliver Neu, he's new, that's why he's called Neu. So he's the new CFO. And it doesn't mean that next year he's going to change the name to old, No, we're not going to do that. But he will obviously take a substantial part of the presentation when talking about the numbers. And then we'll say, Bert van Hassel, by the order of appearance we talk now, our Green CEO, maybe stand up briefly, who will guide you through our green part. We'll have slightly different labeling later. Following in the order of appearance, David Evans, from our US organization, but talking today primarily about the energy business. And last but not least, Katharina Krüger, our head of strategy, who will at the very end talk a bit about our transformation approach. I'm also glad that Mark also spoiled that a little bit in his opening. No worries. I'm also glad that our genset from Blue Star arrived last night just in time. Maybe that's also a bit of a signal, of a sign how sometimes we in Europe and Germany facing bureaucratic challenges. So it was stuck in customs for several days, and now we've got it here. It's outside. You will look into that. You will have the opportunity to look at that product later, because the Blue Star acquisition has been, and still is quite a substantial part for DEUTZ, because it was one of the larger acquisitions we've done over the last year, and so far that we can tell you was a very successful acquisition. So we wanted to also show you a product of that, rather than just showing PowerPoint slides and graphs and other exciting stuff. But anyway, we have to start with the current performance. We heard it earlier, and all of you followed it on the last Thursday. We issued a new guidance, and we were unable to obviously be completely independent on the current market developments, particular on the top line. Let's be very clear, at the beginning of the year and throughout the summer and the beginning of autumn, we were actually still slightly optimistic to see a recovery, or first signs of a recovery in the fourth quarter. But after we concluded getting the numbers for Q3 together, the top line numbers, bottom line's not ready yet, and also the outlook for the fourth quarter, we say, well, it's not possible to completely be independent of the current market environment. We are in, I wouldn't say good company, because it's not good company, but we are in company by a lot of other players from our customers and competitor side, who observe very, very similar situations. And that's why we adjusted the guidance. So our updated guidance for 24 is now, in terms of unit sales, we see just less than 150,000 engines, and our previous guidance used to be 160,000 engines. That would translate into revenue around 1.8 billion euro, coming down from a previous range between 1.9 and 2.1. And obviously and unfortunately, this also has an impact on the EBIT margin because we do lose scale, in particular in the production of engines here in Cologne. That's where we are most affected in terms of volume, and we'll see that later. So our new guidance for the full year is between 4 and 5% on the EBIT margin, and on free cash flow side, we do expect at least a balanced free cash flow. So that's the current view on 24. We'll talk a bit more about the current view also later, but obviously the focus is a lot about the next 1, 2, 3, 4, 5 years, how we are positioning DEUTZ. But before coming to that, I want to give a bit of an insight on the top line development. And we see here on the left part of the page, we see our overall turnover by region. And that's quite important because we see we enjoyed between 22 and 23 a very solid growth to a top line above 2 billion. The first time, at least in the last 20 years, where DEUTZ had a top line above 2 billion. And we see that EMEA, so the European region, is still the dominant contributor when it comes to top line. And that's not a surprise because that's where our construction customers are located. That's where our agricultural customers, at least largely, are located. So we're still very, very dominated by EMEA. And you also know, and that brings me then to the 24 outlook, construction and agri in particular in Europe is under a lot of pressure since pretty much the beginning of the year. And we do not yet see the very, very near-term signs of recovery. On a positive glance is the development of our US business. Obviously, the share grew also from 22 to 23 in a growing overall picture. And that the share grew from 23 to 24 is expected to grow. I mean, that is clear because the top line goes down as well. But also in absolute terms, the US business, and I think David can confirm that, is, well, not growing 10% at the moment, but it is stable. And that is due to the fact that we've got a very, very solid customer base there. JLG, Terex, in the material handling business, telehandler, area work platform, a lot of products which are heavily utilized and used in all the large construction projects in the US, which, to be fair, in the past years were also heavily supported by the US government. So obviously we all don't know what the election in November brings in the US, but what we hear is that regardless whether it's going to be a Trump or a Harris administration, we don't expect a downturn. Some expect in one part a larger upturn than in others, but time will tell, so we will see. But important for us, America stabilizes the business, and our active decision in the last years to intensify the growth in the United States clearly pays off when we look at top line in total. The other active decision we've taken when we started the current strategic journey, and we'll spend much more time on that later, is that we want to continue pushing the service growth and much, much stronger and much, much more solid and with more push than we've done it before. And the numbers clearly indicate that is paying off as well. We were at 450 million top line in 22. We grew in 23 to 484. And even in that challenging year 24, we see a number of above 515. So I think we can be a bit hopeful that, well, a bit higher than the 515 even. But, you know, it's a 7% CAGR over these 3 years in a, at best, stable market, at least if we look at EMEA. And you also see here all regions equally grow. So there's not, you know, the growth is not at the expense of one region. So just to underline and give a bit of a flavor how important the service part of our strategy is, like we will show later. The other aspect is that we have become significantly more resilient over the last years. So our Dual Plus strategy, which we launched in 22, clearly pays off. And if you look at this 10 plus year perspective, and I'm not going to go through all the details here, but we see obviously from 23 that was so far the highlight, with a top line of 2 billion and a bit more and a margin of 7% for continued operations. We've never seen that before, and quite frankly we don't want to lose too much against that, but in the current declining market this is not it will affect us to an extent. But if we look at where we are right now, We are on a level of below 150,000 engine sales, and we are now at 4 to 5%. We're not happy with the 4 to 5%, that's clear. But in the past, before we kicked off Dual Plus, in order to be at 4 to 5%, like in the years 18 and 19, we needed to sell 205 and 190,000 engines. So that shows clearly the structure of the business is a different one. It's much more healthy than it's ever been before. And in turn, it also shows as soon as we get up on engine sales again, we're going to see numbers on that level or beyond. But that's part of the strategy presentation, which we will spend the next hours with. So we are still in a cyclical business, but we're becoming less and less dependent on the cyclicity of the business. And the resilience is higher. And why is that? What we did over the last 2 years in particular is my first handover to Oliver, who will guide you through that.
Yeah, thank you, Sebastian, and also a warm welcome from my side here to our 2024 Capital Markets Day. My name is Oliver. As you know, I took over the CFO position at DEUTZ Group exactly 1 week ago. However, I'm with the company exactly 3 years and 1 week ago, so I'm familiar with the group and the people, with our challenges and opportunities, and last but not least, and maybe most importantly, also with our figures. Sebastian talked about increased resilience as part or as consequence of the consequent implementation of our Dual Plus strategy over the last 2 to 3 years. And I want to give you a summary of some key initiatives, and most of that will not be new for you, since I guess the majority of you followed DEUTZ quite closely over the last 3 years. However, it's good to take 1 or 2 minutes to recap on key initiatives that were the main financial drivers behind this increased resilience, which is helping us nowadays. And I promise you the rest of the day will be entirely about the future. So you see here the different areas, our classic, our service and green and energy business. And I will not go item by item. So basically on the pricing side, that was one main contributor for the performance we see nowadays. Especially in 2022 and 2023, we have increased prices by aggregated 200 million euros in the classic and service business. And you know, when inflation kicked in, we acted, and we acted quickly, and we acted consequently. And the results of that brought us to a different margin level. Besides that, we have been very active on the portfolio side, basically throughout all our business areas. We have been active with the acquisition of Rolls-Royce Power System engine and service portfolio, with a 300 million annualized revenue contribution, a good margin, parts of that already in our this year's financial results. We have been active on the service side. We have acquired Diesel Motor Nordics, DEUTZ Nordics. We have acquired Maurizio Hochschild, thereby we have sharpened our footprint in Northern Europe and also in South America. And we got rid of Torqeedo. Thereby, we were getting rid of almost 25 million euros annualized losses. And I personally think most excitingly, we acquired Blue Star Technologies. Blue Star Power Systems, sorry. We have a revenue impact here of more than 120 million US dollar on an annualized basis starting now, a very good organic growth rate, a very healthy business, good margin quality, and this is a real, from my perspective, a real game changer for DEUTZ, as it brings us into a way more resilient energy business. Of course, it's not all about top-line growth, top-line initiatives, or portfolio measures. It's also about cost, and we have not been inactive over the last years, and especially this year, as you know, we announced when we published our Q1 or also H1 results, we talked about the procurement to purchasing project, where we are getting low to mid double-digit million euro savings this year. But this is not all we did, There were a bunch of further measures, and on the left-hand side you can see those measures which have a direct impact in 2024 that contribute to stabilized results this year. And we had measures that we initiated since the beginning of the year, and the purchasing program is one of the examples. We had adjustments of our shift model so that we ensured we are acting and reacting flexibly also in our production setup to the decreased market demand. But also recently, over the summer months, we initiated more short-term measures. Short-term measures like limiting spend volume to the degree necessary, like freezing capex to the degree necessary, reducing new hirings. So we addressed topics that really stabilize and have an immediate impact also in 2024. However, that is what we announced this morning with the press release. We are and we will now also, with way more focus, look into our structural cost. And I think personally that the current market downturn, as little as we like it, but the current market downturn also gives us a unique opportunity at DEUTZ. It gives us a unique opportunity to address our cost structure and to get the company in a shape that with the increasing scale effects, we are in a perfect position when the market is kicking off again. And to give you some more details on what we are addressing, and to some of those measures, you will see later more details in the parts of my colleagues. But we're going to specifically look in the area of R&D. Where we hear it from Markus later, due to the delayed emission regulation cycles, we see in fact potential for structural measures, or that's pointed out clearly, for a relevant reduction in headcount. On the green side, and also that we're going to hear later from my colleague Bert, we want to reduce spend on our investments to what is necessary. We want to be well positioned from a product side, but we also want to be investing where we see a customer demand is there. There are further measures addressing regional setups with the headquarters, streamlining supply chain service, especially in the classic business, and also generally streamlining our functions. With all of that, we are intending to get a 50 million euros structural cost reduction, which we will implement now. We'll start now implementing. We're expecting at least a 20 million euros effect already in the coming fiscal year 2025, and then the full impact starting from beginning of 2026. With that, I would like to hand over to Sebastian again.
Yeah, thank you, Oliver, for the update on the current performance, but also on the first set of countermeasures which we're doing, and I can only reiterate that sometimes it's very important to have such a triggering point to make really use of that. Never waste a good crisis, although we're not really in a crisis, but it's important to make use of that.